Hi, a very warm greetings to all my viewers. 2 weeks back, I had created a video on how to create your own momentum portfolio. I was not able to cover the tools part in it and show you a practical demo. It was more of a giving you a theoretical construct. So today I'm back with giving you a practical demo of three different tools. Two are professional tools, and the third one is something which you can do it yourself using charting, scanner, and writing a Python code. And I will demonstrate that. Just a disclaimer: I don't have any commercial relationship, even like a referral or any such thing with the two tools that I'm going to demo. It's just that I have used them and I found them useful. So I'm sharing with all of you. Uh, I will share the link of the part one of the video for those viewers who have not seen the part one as this in the description of this particular video. So please go through it. But just before I jump into the tool demo, I wanted to give a recap of the the momentum and how can anyone go about creating a momentum portfolio for himself or herself. So it's a very simple four-step process. The first one is you need to select the securities universe and your overall strategy characteristics. Please watch the video. I have described in detail what do you mean by that. The second one is, for example, I run this strategy on the stocks that are trading in the FNO segment. People run it on Nifty 500 or Nifty 100 or Nifty mid cap 150, etc. So you select the stock universe on which you are going to run the portfolio and decide on a few critical parameters. Then you want to filter those stocks based on a predefined criteria, which can be a combination of data-driven criteria or the technical criteria or a fundamental criteria. And then once you have the filtered list, you want to rank it. Typically, people rank it on the Sharpe ratio or absolute return in percentage term for a given time frame. The most common is 1 year or a 6 months or average of 1 year and 6 months. And then you need to decide what should be your rebalance frequency, when do you rebalance, and how do you exit either the full portfolio or some stocks in it. So this is a simple four-step process. And I also received a comment which said it's all good in theory, but can you show it a practical demonstration? So here I am to show you how do you use certain third-party tools as well as can do it yourself uh, and achieve running a momentum portfolio. So I will start with easy to a little more complex. So the first tool which I'm going to demo is deifnedge R zone. And this is something which I use. Again, it's a paid tool, so you may like to look at the subscription and all the associated aspects of that. They have also come out with something called Momentify. And if you have not watched the video, Prashant Shah, who is the co-founder of deifnedge Opstra, has himself gone ahead and created a few videos which are fairly useful videos. You can watch his videos. Once again, I don't have any commercial relationship with them. Okay. So here I am. Let me take you to deifnedge securities. And this entire thing is called zone or the R zone. So this is how their dashboard looks. We don't have to worry about what is there in the dashboard. We will come on the left side pane and we see here something called momentum scanner. So you click on the momentum scanner and select the top one, which is called momentum investing scanner. Once you select the top one, you decide which group, which was the stock universe, which is the step one in the framework that I had described in the previous video. So you select where you want to run. So there are different groups. You can run it in ETF, various things you can run it on. I run it on FNO. So I have created a predefined strategy using their Momentify platform. And you don't have to necessarily use the Momentify platform. You can just use this R zone. So the one which I had created, let me select one, which is Momentum Q. I'm calling it Q because the hedge fund which I'm going to, planning to set up is called Quant Grow. So the strategies I'm calling with the suffix of Q. So Momentum Q FNO. Now, this runs on the stock universe of FNO stocks. Let me explain some of the filtering criteria that I'm using here. And once again, these are just suggesting and telling you how to use it. You can decide the filtering criteria which you plan to use. So the first one I'm using, the stock should not have retraced more than 30% from its 52-week high. The volume should be average. I'm not looking at any criteria on the price. The stocks that I'm filtering should be trading above the 20-day moving average and the 50 moving day average. So I have gone ahead and selected. You can go and you can edit these values. You can also have predefined criteria. There are a lot of predefined criteria here. It's a fairly versatile tool. Again, the intent is not to get into detail of this tool. This is more to give you the introduction. The tool vendor themselves have created many videos, and you please go ahead and watch it. Um, so this is the filtering criteria. I also look at the relative momentum vis-a-vis Nifty 500, and I look at the ratio chart of that particular stock vis-a-vis Nifty 500 and see that the ratio chart should be above the ratio, the current ratio should be above 200 EMA. This is just my style. Now, this becomes my filtering criteria. So let me scan this. Now, this is saying filter is not qualified. You know why it is saying filter is not qualified? Because I had put a market trend filter. This market trend filter is that when do I stop this? So I said this when Nifty 50 or in fact Nifty 500 is trading below 20 EMA, then I will not run this strategy. Since right now this is trading below uh, 20 EMA, it is saying the filter criteria is not met. So let me, just for the demo purpose, disable this market trend filter. Now it will run. Now there is no market trend filter. So which means assume that today I want to create a momentum portfolio. I have used the filtering criteria that I defined, and now I am going to scan or select, come out with a list of filtered stock based on this four different simple criteria right now. So I click on the scan here. Now it is going to scan all the 221 stocks which are trading in the FNO segment. If you would have put in Nifty 500, it would have gone ahead and scanned all the Nifty 500 stocks. So whatever you stock universe you are going to put, it is going to scan that. And whatever filtering criteria you apply, for example, I demonstrated, I'm using the stock should be above 20 EMA and stock should be above 50 EMA. The relative momentum should be above the 200 EMA ratio vis-a-vis Nifty 500, and the stock should not have retraced more than 30% from its 52-week high. So these are the simple filtering criteria that I'm using. They also have a way to use certain fundamental filters. So for that, they have different tools where you can, which is called radar. So one can go and create. Once again, I'm not getting into deeper dive of deifnedge, Opstra. I personally find it useful, and it's a good ecosystem of tools. So let's see how far it has reached. I think that code is good. It's just that not totally optimized as against some of the other new tools that I've seen, but still does your work. One can always wait a minute or two. We are not in such a hurry that over a weekend we can't spend 15 minutes to create this important portfolio. So as you can see, this is scanning the entire FNO universe. So which was our step 2. It has completed scanning 210 stocks. Just a few seconds and it will finish the stocks. So now we are done with the scan. After the scan, because as you know, the market is in a downtrend, we have got only 29 stocks out of 221, which are meeting our filtering criteria. So this becomes our universe. So first of all, as I mentioned, I remove the market filter. Otherwise, I have something called market filter, where right now I will not be running this momentum strategy at all. But since I have to demo it to you, I'm just demoing it. Assume that I did not have a market filter, then we got 29 stocks. So that was completion of step 2. Now the step 3 is we want to rank it on something. So how do I rank it? So for ranking, we need to look at the period in which we are going to rank it. I'm using 1 year time frame to rank, which is 252 trading days. I can use other time frames. For example, I can use 126 for 6 months and similarly 90 and 60 and assign different weightage. I'm just using simply 1 year time frame to rank them. Now, that's the time frame. What is the criteria based on which I'm going to rank? So it gives me 3 different criteria, or 5 different criteria actually this tool gives. Important ones are return percentage. So over last 252 days, what is the return this particular stock has given? I can rank them based on that. or I can rank based on the sharp return or volatility adjusted return, which is their way of saying it's the return divided by, I think they use something called standard deviation, but it's a volatility adjusted return. So I prefer using volatility adjusted return. So I will return from high to low. Now, this is how the rank is showing. So on the top is Paytm, then Fortis, then MFSL, HDFC AMC. What I'm going to do is if I'm creating a 10 stock portfolio, I'll just pick up the top 10 stocks from here and invest 10% in each of these stocks. Okay. So that would be my first investment. Then I will go back after, let's say my rebalance frequency is a month. Then next month, the same date, 8th of September, I will come back to this tool, again run this and rank the filtered stocks and see if the 10 stocks where I'd made the investment are they appearing in the top 10 or top 20, whichever logic I decide. And I have explained all this logic part in the first part of the video very, very clearly. So you can choose that logic. Are you going to retain them if they're in the top 10 rank, or you are going to give them buffer and keep them if they're in top 20? Are you creating a 10 stock portfolio or 20 stock portfolio, etc.? Are some of the decision points that you have to take. Assuming you have taken all that decision point, this is how you uh, create your first stock portfolio. And then let's say if your rebalance frequency is every month, then every month on the same date, you will go back and you will rerun it and you will decide which stocks will exit and which new stocks will enter. Okay. So this is a very useful tool. Let me just show you a simulation because right now market is in a downtrend. So it is not giving you a lot of stocks. So how do I backtest this? So for that, I created on this tab called simulator. This is a momentum investing simulator. Assume that my rebalance frequency is monthly, so it gives you various options. You can do monthly, weekly, or quarterly. You can decide. Rebalance date, I want to do it on 1st of every month. You can decide whichever 5th or 3rd or whatever is suitable for you. Many of the portfolios get rebalanced in 1st. I want to have a 20 stock portfolio and I want to test it from, let's say, 1st of January 2024 till now. Exit rank, I'm keeping 20, which means next month when I run the rebalance, if my existing portfolio stocks are not showing up in the top 20 rank, I will exit them. And in their place, whichever has come in the top 20, I will buy them. So as simple as that. Rank criteria is volatility adjusted return. In this case, allocation reinvestment. I'm not keeping any other thing. Now, exit strategy. This is very important because I said I will exit the portfolio if the market is down because I believe that momentum does very well when the market is in at least sideways to bullish trend. But when it gets into bearish trend, then momentum strategy starts underperforming and one should not be running momentum strategy during the downward market trend. So I prefer exiting them. Okay. So exiting based on my criteria. So whatever criteria I decide, I can, for example, I can, in fact, let me just for a second, let me put this market exit thing, which I had disabled, market trend filter. So this is my exit criteria. And let me go back to the simulator. Then I don't have to put an exit strategy here because this exit strategy is exiting a particular stock, not the entire portfolio. Okay. Great. So let me simulate this from 2024. So this is how you go ahead and backtest. Okay. And I will stop it and I'll show you. I'll not do it for the entire period because that will take too much time. So assume that I started this on 1st of January 2024. So this is selecting the 20 stocks, for example, Titagarh, REC Limited, Inox Wind. So 20 stocks, right? Polycab, Hutco, all these 20 stocks, they created my first portfolio. Then I will invest 5% of the intended amount that I want to run in my momentum portfolio in these 20 stocks and keep it for 1 month till 1st of February 2024. Now let's see what happens on the 1st of February 2024. Same thing I'll do. Same whatever screens which were there where I had filtered and then I had ranked. So now what happened when I ran it again, and because I am exiting the stocks which are no longer featuring in the top 20 rank, it is giving me nine exits. So nine stocks exited and nine new stocks are entering. As you can see, exited stocks. So this is the churn in the portfolio. And in January, probably it was a bullish market. So this entire portfolio gave a 12% return. So what I do is I exit from these nine stocks and whatever money I got, I reinvest in the new set of nine stocks, keep the 11 stocks without touching it for the February month. And then I will keep it for one more month and then I will rebalance on 1st of March. Now we are going to the 1st of March. Okay. Now, as you can see, on 1st of March, again, 10 stocks are getting exited and 10 new stocks are coming in the fore. And the total PNL is 9.25%. So more or less February month didn't make money. So I'm not going to run it, but you will see, if I keep on running, for example, if I just put on auto simulate as I'm talking to you, you will see that automatically it is doing the back test. And now we have reached to March. Okay. Uh, you can see different stocks. Now, instead of exiting when they are in 20, you can keep a buffer and you can exit only if they get out of 40. That is purely your choice. And this particular scanner is giving you the back testing mechanism to test rather than deciding on some random criteria or based on your gut feel. You can test your strategy using that, right? So for example, as you can see, by 1st of July we were running at 34% PNL because the market was favoring, and when the market is bullish, this strategy works wonder. 1st of August the PNL became 44%. Nifty had not given, on Nifty 500 had not given 44% in that. 1st September, it is showing a 55.33%. This is 2024, right? So 55% against much lower. Now, as you can see very quickly, let me hold it here. Okay. So November, it exited. The entire portfolio was exited because I have a market trend filter. And then in December, it again entered, and after that, it was out in January, February, March. There was no entry. We had paused this and it had made 59.9% return. April, it re entered in April 2025. Okay. So in April 2025, this strategy re entered. So as you can see from October, again, December, it entered, but then exited. And it was out of that because of the logic which I have mentioned. Now, if your logic could be different and may not exist. So I'm not here telling you what is the right logic. I'm just giving a tool demo and I'm telling you this tool is capable of doing the back testing. As you can see on 1st of July, 1st August, we are no longer running this strategy. So this ran April, May, June, July, 4 months it ran. And as you can see from 1st January 2024, if we were running this portfolio, it was giving 68.23%. It is no way suggesting you to run this portfolio or use the same filters or use the same criteria. I'm just giving you a demo of a particular tool, which again is a paid tool. It is not a free tool. Once again, I don't gain anything by telling you that, but I have used it. I find it useful. That's why I'm showing it to you. This is the way I found in my backtest. This is useful. I have also certain strategies which are based on the weekly rebalance. They are also good, but there are higher drawdown there. This tool lets you fine tune your strategy, lets you backtest, and thereby you can decide on your own strategy rather than relying on anyone else. Okay, that's in nutshell about this. Once again, I demonstrated you R zone of deifnedge. And now they have something called Momentify. If you create this portfolio, you can even invest um, with them using one click. So this is the first tool, which is very easy, very user friendly. However, it is a paid tool. So let me move to the second tool. The second tool is actually I had used before this R zone. So my journey to using a tool started with this particular thing. Viraj is the guy who has created it. It's called momoindiascreener.in. And Momo India Screener uh, is cheaper. Of course, this is also not free. It is also a paid tool. Earlier, he used to give it free, but now he has started charging. I think it's 4,000 rupees or something. You can check the pricing. Now here, similar thing you can do. Now the theoretical basis is the first part of the video which I've made, right? And I have demonstrated to you one tool. Now this is the second tool that I'm demonstrating it to you, which is called momoindiascreener.in. Again, a paid tool. Again, I have no financial relationship with them. I don't get absolutely anything, even if we become a member or don't become a member. Okay. So here I will go and create a screen. Now let's say that I want to say this is Dheeraj momentum. So I am trying to define my own momentum strategy. Now, as I told you, the first step is select the stock index universe. So let's say that this time I select Nifty 500 as my universe. Now he has given you a lot more sorting factors. So this is the step number 3 in my video, the previous video which I told, where you have to rank. So what are you going to rank on? So you can rank on various things which I have given. I'm just demonstrating you with a sharp return of 1 year is the ranking criteria which I'm going to do and sort it highest to lowest, right? So I decided the universe, I decided a sorting criteria. Now I can use certain filters, which I said, right? So for example, one of the return could be that stock which I want to invest in should have given a minimum return of 6.5% in 1 year. If I don't want, I'll just make it blank. Okay. So make it 0. If you want a volume criteria, you can put it there. Now you can apply certain moving average filter. For example, the way I was showing you. So for example, this should be above 200-day moving average, above 20. For example, in the one which I showed you, deifnedge Obstra, I just use a 20-day moving average and 50-day moving average. So that is another filter criteria. From the all-time high, whatever, if I say 100 means it will select everything. If you want to apply certain criteria, 1 year high, so I had applied, it should not be more than 30% away from 1 year high. So I've made it 30%. I'm not applying any other filter. Sometimes when you want to remove the circuit stocks, you can put a smaller number. Like for example, stock should not have hit more than 10 circuits in a year. Okay. More than say 5 circuits in the last 9 months. So you can apply. If you want, you can leave it. It's up to you. And you can also put a small, price to earning range or a market cap range. So it's all up to you. I'm not using that as a filter criteria. So these are my filter criteria. Again, you choose your own filter criteria. It's just telling you a particular simple tool that you can use to come with it. And I'm just saying update and apply filter. Okay. And after that, this is what I am getting. So this is the list of Nifty 500 stocks. I will have to again say, for example, I wanted top 20. So I will use the first 20, for example, Fortis, JK Cement, Paytm, Autumn Invest, Sarda Energy. These 20 stocks are coming. I will invest 5% in each. After that, I will do nothing for whatever is my rebalance frequency. For example, my rebalance is 1 week, then for 1 week, I'm not going to touch it. If my rebalance is 1 month, for 1 month, I'm not going to touch it. Assume that I will have a monthly rebalance frequency. I will go again after 1 month, again run the same scan. And if I want to exit, if the stock is not in the top 20, I will look at my existing stocks and then look at this rank. If they're in top 20, I will retain them. If they're not in top 20, I will exit. And that money I will invest in the new ones which have come in the top 20. This is how you go about running this using momoscreener.in. Now, both are paid tools. Now, take a scenario where you want to invest nothing. You don't want to pay to Mr. deifnedge, nor you want to pay to Momo Screener. I have created something now. This may not be. I can share the code. I mean, if you subscribe to my video and just share a DM on my X ID. My X ID is at Dheeraj Sinha, DHIRAJ SINHA. So subscribe to my YouTube and X and just send me a DM that you want the code. I will share it for you. So what I'm doing is I have created a charting scanner which has my filter criteria. So this is my filter criteria. Okay. So this is step number 1. So for example, I've selected the stock universe, which was step number 1 on future segment. I want ADX. So I have applied here ADX. I mean, again, you decide whatever I have applied. ADX should be greater than 20. RSI should be greater than 50. Stock should be above 20 EMA, above 50 EMA, 20 EMA should be greater than 50 EMA, and stock should not have retraced more than 30% from 52-week high. So this is a simple scanner which I have created. Let me run the scan. Once I run the scan, right now I'm getting only 15 stocks because the market is in a downturn. Now what I'm going to do is I'm going to export uh, this to an Excel, this symbol. Okay. And this stock, the code which I've written asks for an Excel called stock input. So I'm going to save there as something called stock input. So I'm saving it as stock input. Okay. Then I go here. I will have to do one quick editing. I mean, of course, you can modify code if you are good in coding. You can probably modify the code. But in my case, I just do a small editing. What I do is I remove the first row. Okay. And I remove all the columns. I just keep the symbol column. Okay. Just the simple symbol column. Okay. I've removed all these. Even I'll just keep the name of the symbol, not even this title, which is symbol and the links. I mean, this is as per my code. You can write a better code, of course. And I will just save it. Once I have saved this, I close this. And then I go to run my Python code, which I've created. Okay. So let me go to Python, my code, and I run my Python code on Google Colab. So I go to Google Colab, and here I have written in the Jupyter notebook, I have created my code. It is called Stock Metrics Colab. Okay. And this code is well-designed section-wise code. So I'm just going to run the code. Of course, if I can briefly tell you, this uses Yahoo Finance. So you need to install Pandas library of Python. You need to uh, install Yahoo Finance. You need to install all these libraries, right? NumPy, ScriptPy, Google Colab, etc. So that is the first step. Then you have to upload the Excel file which we just saved out of charting. And in Yahoo Finance, it takes the ticker name .ns. So this code appends ns if the ns is not already present. Then I upload the file. After uploading the file, I have given this 252 days criteria for ranking. You can use any other criteria. This is an editable user editable field. So if you're using this particular code, you can always edit. And then it fetches that data from Yahoo Finance in an Excel format, and you can download that Excel. So let's quickly run this. So I'm running this entire code in Google Colab. Okay. Now you can see that we are running the third section where it will ask for uploading the Excel. Yeah, it's taking a bit of time. Okay. So it asked me to upload the file, choose the file. Here I go and select the stock input file. And now I have uploaded the file. As you can see, all these MFSL, Fortis, it has appended .ns and it has created an output. Since I already had an output, it is just making it stock metric output 3. You can name it whichever way you want to name and you save it. So once you have done that, once you have downloaded that output from Yahoo Finance, you are going to open this. Now, this is a hack which we are doing. We are not using any third-party tool. So as you can see, I have done this on 252-day return, the beta and the Sharpe ratio. These were the stocks which I had. I will just sort them using Excel sheet function. Okay. I can simply sort them. For example, I want to sort on the Sharpe ratio, high to low, largest to smallest. It goes and shows. So my stocks are, and let's say if there are only so many stocks. So if I wanted to invest in top 10, I will select Fortis, Paytm, MFSL, HDFC, AMC, Dalmia Bharat, whatever it is. I mean, this is just the process. I will go ahead and invest in these top 10, these top 10 stocks right now. Assume that I wanted to invest 20. If I wanted to do 20, obviously it is 20 stocks are not even meeting the criteria. So I have to invest in only 13. But if I had a market filter, I will not even do it right now and wait for the market filter to be positive to run this strategy. This is just to give you a demo. If I wanted to run it on 252-day return percentage, I can sort on that. If I want to do a return divided by beta, I will just create a return divided by beta and sort it on that. And then follow the similar process. So this is how you can do it yourself if you don't want to pay to the tools, but those tools are sophisticated. They take away this headache of maintaining your code, etc. If you're interested, I can share the Python code that I just ran here. I will definitely, I've made the charting scanner public, so you can use it. And this is how, uh, I mean, these are three tools, right? If you're using the first one, it's very easy. That's my personal favorite. I use that. If you're using it, you have to spend 10 to 15 minutes to create your own momentum portfolio and run it. And the tool cost, again, I mean, the way I'm saying, you may think that I'm getting some commercial benefit out of that. Absolutely no. I just feel that there is no point in giving someone for running multiple strategy. If someone is running on Nifty 50, Nifty 100, Nifty uh, uh, 400, etc., and charging you separate 6,000, 7,000 rupees subscription fee for each of them. Very easily, you can just do it whatever way you want to do it on your own, uh, using a tool which is cheaper. In fact, if you become their brokerage client, they even offset your broking against the cost of that R zone, etc. So that's all I had today. I share a lot of content, and my favorite is, of course, on the options and the volatility. And I plan to keep on sharing a lot of content which are deeper. These are not for the beginners, these are for serious market participants. I'm not here to increase my viewership by saying something very create a strangle, create a straddle, and do this, do that, the usual kind of stuff. And that is why I can't make too many videos, but whenever I make a video, I put in a lot of effort. So I would really appreciate if you subscribe to my channel, you share with other serious traders like you, and if you really benefited, then like it and share it, because my viewership is very less. Many people say, the kind of content which I'm sharing is really good quality, but the number of people who have subscribed to my channel is just in 1,200 or something, which is laughable. So if you can help anyway in that, I would really appreciate. Thank you so much. And with that, I will stop uh, today's video. You have a great trading week and time ahead.